We got some huge news for ASML stock investors as the company's management team described the next fiscal year as being a big question mark. I'll discuss that development and what it could mean for ASML stock investors, and I'll show you precisely where those comments came from that investors are talking about right now with ASML. Let's jump in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So let's start with the 2025 guidance from the management team, saying that they now guide for the full year 2025 to increase by around 15%, with gross profit margins around 52%. They expect demand to be more skewed toward the second half of the year. So as the year progresses, they expect revenue growth will accelerate. They continue to see strong demand related to artificial intelligence for both logic and memory. So, given that backdrop and given that 2025 is expected to improve throughout the rest of the year, Q3 and Q4, I was surprised to see the company talking about 2026 as being potentially a year with zero revenue growth, right? After 2025 is expected to increase by 15%. So, here's the comments that really rattled ASML stock investors and sent the stock price down. And it was from the management team in this earnings call transcript for Q2 2025, which this highlighted transcript I'm reviewing right now is available for all channel members. The company's management team said that some customers are navigating specific challenges that might affect the timing of their capital expenditure. And against that backdrop, we are still praying for growth in 2026. This is a typo here. It should say 2026, but we cannot confirm it at this stage. So the management team saying we're hoping for growth next year, but we can't guarantee that our business is going to grow because our customers, and these are companies like Intel, Micron, Taiwan Semiconductor, and Samsung, we can't confirm that they're going to take these orders next year because they're facing significant uncertainties about their business. They don't know what their business is going to look like. So they're telling us, you know what? We're going to wait and see before we confirm the acceptance of these orders next year. And it's all a result of the increase in tariffs. These businesses, they're seriously seeing big demand for artificial intelligence, especially Taiwan Semiconductor manufacturing. Micron is also experiencing a boom. Intel is facing headwinds. Samsung is also experiencing some headwinds as a result of tariffs. But overall, industry demand for artificial intelligence is absolutely booming. You would think that they would be ramping up and trying to get as much supply out as possible, but conflicting that growth for demand in its products, you have the tariffs, which are increasing its cost and also increasing uncertainty. The businesses don't know that once consumers see these higher prices in stores, if consumers will keep spending money. So far, consumers in the United States have kept the economy afloat by spending a lot of their money. They're not saving, they're not being more conservative. They keep spending money, and that's fueling growth in profits for all these businesses. But if the US consumer should start to pull back, should start to save more money, that could be a huge headwind as a result. And these companies don't want to spend ahead of that kind of pullback. And the tariffs are a reason, a catalyst that could cause the US consumer to pause spending or slow down spending after several years of robust spending from the US consumer. ASML's management team saying that we are currently facing an increasing level of uncertainty surrounding macroeconomic and geopolitical developments, which may have both direct and indirect implications for our business. And this is one of the bigger headwinds now when we're talking about tariffs of, let's say, 10% to 30%. Um, it's not so much the price of the tariff that's the concern right now, although that is a big concern for businesses. but it's also the uncertainty. It's the not knowing what the actual number is going to be and not knowing how consumers are going to respond in that environment. That's really the big question mark. If these businesses were like, okay, all I have to do is if my costs are going up by 10%, I just raise the price of my product by 10% and boom, I'm set. I'm equal to where I was before. If that's all they had to do, then no problem, right? But that's not what's going on here. Businesses, first of all, don't know if their costs are going to be up by 10% or 30% or 50% or 75%. These numbers are changing seemingly on a weekly basis. So businesses can't make decisions because they don't know the numbers to make these decisions. That's number one. Number two, once they get that number, then they have to make the calculation about what to do in terms of their own pricing strategy in their own business. Do they raise their prices by the same amount that the tariffs have increased? Do they keep their prices the same? Do they change their product? Right? Some companies have just stopped sending certain products to the US because of the tariffs and all of the implications. They just said, you know what? We're just not even going to send that product to the US anymore because of these tariffs. Um, and then how do you change your policy in terms of manufacturing? Are the costs so prohibitive that you now need to manufacture in the US instead of manufacturing outside the US? Has it gotten to that level? That's another question mark. So many question marks that have yet to be answered. And so businesses are just saying, you know what? Just not make any decisions. Let's wait. Let's get more development in terms of the actual policy numbers, and then we can make decisions. And so ASML is starting to see that, right? As a business to business company, right? They're selling their products to other businesses. They're not selling it to consumers. And other businesses have already begun to pull back on their spending. They've already began to pause their spending. They've already began to pause hiring decisions. They're not laying off people yet. They're not firing people, thankfully, but businesses have begun to pause spending and delay spending wherever possible, right? Before they do any firing. Businesses are afraid to fire anybody because of how much difficulty they had in hiring workers following the economic reopening. They had such a difficult time. It was so expensive to attract workers that they don't want to fire workers. That's their last line of cost cutting for businesses right now. Areas like capital expenditures is one of the first things that businesses are cutting. Inventory spending is another area they're cutting. Hiring new workers when somebody quits is an area that they're cutting spending. And ASML is starting to see these headwinds. And that's why they said, like, look, we're hoping for growth in 2026, but we can't guarantee it because of the conversations we're having with our customers. So hopefully, 2026 turns out better for ASML than what they're talking about here. But thankfully, longer term, this business is in great shape. The product that they're selling, arguably, the competition is two steps behind. Demand for artificial intelligence is soaring as a result of the rising effectiveness of AI. And so, longer term, it's in a great position. In the near term, there's a lot of question marks. And I've said that I think when you see businesses in that situation where they're longer term strong, shorter term a little uncertain, it could be a buying opportunity. And for ASML, I did make several videos highlighting that I do think this is a buying opportunity for long-term investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.